Hi everyone. Yesterday I have shown you 4th November chart, Nifty chart, how to analyze, how to make an entry and exit into the market with a very good profit. Now let's look at the 5th November. As I promised, I'll be doing all Nifty days. I mean 5th, 6th, 7th, 8th continuously whenever I have time, but I won't skip even one day. I wanted to show you how this strategy works. So first of all, I wanted to show you about like what are all required. First thing what we would require is a 2 minute chart. You can see on the screen, this is a 2 minute chart of Nifty, and this is the 1, 2, 3, 4 moving averages, 6, 9, 20, and 200. And these are all simple moving averages and pivot points and the support and resistance. That's all we would require, and a volume chart to look at if there is any breakout or market is going in one direction with full volume, right? And also we wanted the information of the previous day's 45 minutes. So for analyzing the 4th November chart, I have considered the previous day's 45 minutes, and I have shown how to make an entry and exit into the 4th November. But now since we are talking about the 5th November chart, I'll take the 40 last 45 minutes of the previous day, that is 4th November chart. So I'll make a triangle, sorry, the rectangle, and I'll go to the 4 sorry 245 candle. Okay, this is a 245 candle, and I'll mark the high and lows from 245 to 330 of previous day. Okay, so this is my highs and lows, but as I mentioned, you need to include all the moving averages also within the box. So you need to bring down so that it touches, at least touches this moving average. So all four moving averages are included, and highs and lows of the previous 45 minutes also included. Now what you need to do is you need to extend this rectangle for the next day. Okay, before actually market starts, and you need to feel that this is a kind of a resistance zone. you know if it opens below this, you can go bearish. If it opens above, you can go bullish. This is what I explained you for the 4th November chart also. The same thing I'm talking about 5th November. Why I'm doing the same strategy multiple times over and uh, over continuously is to make sure that you understand the concept and you practice it, right? Now let's see. Now we know the moment the 2 minute candle on the next day opened here, we know it is a bullish, right? Why do I call it as a bullish? Because you see the market closed here, right? Sorry, let me bring it here. Market has closed here, but you look at the kind of a large move. Consider the previous day moves and all. Now you see yesterday's opening to today's 2 minute candle, right? Let me bring the volume little down so that you can see. Now you see. So what does this mean? The yesterday candle closed here, but today's morning first 2 minutes candle is formed like this. So how do you understand a particular candle? I'll make a separate video for understanding the candle, but for this time I will consider this particular candle as a bullish candle, meaning that so the candle has raised from here to here, here to here, here to here, and this entire portion is a green portion for me. Actually what has happened is the candle actually opened here but closed here, right? This is the red portion. Okay, but this entire thing becomes the green portion. Okay, so which one is more, the green or red? The green is much bigger, right? This particular thing is a green one, right? And the red one is very small, right? So this is a bullish candle. Okay, but what's our strategy? Our strategy is if the candle closes above this, okay, and we will mark the high of the candle and we will make an entry on the long side. But did the candle, and on the next candle, did it break this high? No. So what we need to do is we need to hold till candle comes close to the one of the moving averages. That's what our strategy which we have discussed. And a red candle is taken out by a green candle. Here red candle, the next candle has not taken out the red candle. Here there is a red candle, but the green has not taken off. So this is a red candle. The high of the red candle is not taken out by the next candle. Here is a high of the red candle not taken out by the green candle. Here the high of the red candle taken out by the next green candle. So I am going to make an entry on this point. My red candle high is taken out by a next green candle. See, this candle or this candle, it is completely fine. You can take the trade on the this candle, second candle, because the second candle only crosses the high of the previous red candle, right? None of the green candle crossed the high of the previous red candle. Here, the previous red candle high is taken out by the second green candle because these two are green candles, and you can consider this as one candle only because it has come from like this and like this, right? So this is how it happens. Now what I have done, I'll just remove this chunk. Now on the high of the red I mark, this is a high of the red I mark, and the moment a green candle takes off the high of the red candle, I will enter, right? This is my first entry. Okay, what is the condition? One is the height of the red should be taken out by a green candle, and it should be close to one of the moving average. Whether it is here, whether it is here, whether it is here, it is absolutely okay. And one more thing I wanted to tell you, whether it is on the moving average or it is just above the moving average or it is just below the moving average, it is completely fine. Okay, the moving average is not a single line, it is like a, the mesh. Okay, the this is a kind of a line it is. Okay, so you can take on it or just above it or just below it. Whenever a red candle is a red candle, height of a red candle is taken out by a green candle, here you are going to make an entry, right? Exactly on this point, 1 rupee above this red candle. This is a red candle and this is a green candle. Okay, hope this is clear how to make an entry. I have made an entry. Okay, so now what you need to do, you need to just make an entry and it has gone up. There is a resistance point, right? In case if you want to take some profit, because there's only two candles, you can take, otherwise you can hold. Again it has come back to the moving averages. My 20 is rising, right? My 20 is rising. 20 period moving average is rising. So the moment the red candle height is taken out by another green candle, you will make an entry here. Okay, I'll show it again. The When the 20 period moving average is rising above the 20 or below the 20 or on the 20, so this red candle is just below the 20 and mark high of the red candle, and the moment a green candle takes off the high of the red candle, make an entry here. The moment you make an entry, now you see this is how the flow goes. Okay, one entry over here and second entry over here, and your money is from here to here completely, right? And you can make few more entries. I'll tell you a simple and effective strategy. One entry here, one entry here, one entry near one of the moving averages. Okay, you can even take this candle, the green takes out high of the red, but you don't take, though there is no green candle taken off the red candle, but this is little away from the 20 period moving average, so you don't have to get into this. The moment you are away from the 20 period moving average, what you need to do, you need to make the profits. So from here to here you can make a profit. I'll also tell you how to trail your stop losses. So now what happened, you have entered here. Okay, entry is important, entry is done, but what about the stop loss? Suddenly stock can fall like this, right, making you a huge loss. So you always need to protect your stop loss exactly under the candle, under the red candle. I prefer, if you are going on long, you should take a high of the red candle your entry and low of the red candle is your stop loss. That's it. If you are losing, your loss is this much, but if you are winning, so many candles you are winning. So this is how you should do your uh, stop loss, right? So thank you very much. I'll also talk about how to move your stop loss from here to here, so that you are very safe, securely, getting into the profits. So there are a couple of more strategies which I'll talk. You don't have to do the whole day trading, from here to here. What time? So 10:30. 10:30 you are out from the market. 9:30, 9:15 you entered. Half an hour, 45 minutes, 1 hour. Just go out of the market. That's it. You don't have to be there in the market for next 1 hour, 2 hour, doing continuously multiple trades and losing the money. A simple, very straight, direct strategy that you can apply on this. So thank you very much. See you on the next video.